So I was looking at some recent financial reports, and TVS Motor Company, they've released their results for the quarter ended December 31st, 2024. It seems like they've had a pretty interesting few months.
Oh, really? Yeah, TVS, they've been making some moves lately. What exactly caught your eye?
Well, for starters, their operating revenue grew by 10% compared to the same quarter last year, reaching around 9,097 crore rupees. I mean, that's a pretty solid jump, right?
Absolutely. That's a significant increase. It shows they're doing something right in terms of, sales and market reach. Their EBITDA margin also seems to have improved, which is pretty impressive.
Yeah, their EBITDA margin hit 11.9%, which they're calling their highest ever, up from 11.2% last year. That's a decent margin improvement, I guess.
It is, and that jump in EBITDA margin, it basically suggests that the company is becoming more efficient in its operations. They're likely managing their costs better and, making more profit from each sale.
So, about the sales numbers, they sold 12.12 lakh units this quarter, which is a 10% increase year on year. And I noticed that their electric scooter sales jumped by 57%.
Exactly. That's quite impressive. It seems like they are tapping into the growing market for electric vehicles. And that's a smart move, considering the current push towards more sustainable transport options.
That makes sense. I'm seeing that motorcycle sales grew by 6% and scooter sales were up by 22%. So it's not just the EV segment. All these figures seem to indicate an overall positive trend for them.
Well, yeah, that's right. The growth across all segments actually shows the company's diverse portfolio is doing well, not just the electric vehicle push. It's like diversifying to avoid putting all your eggs in one basket.
So, what about their profit before tax? I saw they mentioned something about a fair valuation loss on investments impacting it.
Right. So their PBT grew by 8%, reaching 837 crore rupees. But it actually includes a fair valuation loss of 41 crore rupees on some of their investments, compared to a gain of 65 crore rupees in the same quarter last year. So that gives you a perspective, right?
That's quite a swing. It really shows how much market fluctuations can affect these numbers.
Precisely. It highlights the risks associated with investments and, how they can impact the overall profit, even when the core business is doing well.
Now, let's talk about some other things. I noticed that they've acquired an additional stake in Drive X Mobility Private Limited, making it a subsidiary.
Yes, that's a pretty interesting move. By upping their stake to 87.38%, TVS is gaining more control over DriveX, which is probably related to their strategic expansion in the used two-wheeler market.
Yeah, that's what I thought. And also, there is the mention of a scheme of amalgamation with Sundaram Auto Components. Can you explain that a bit?
Sure. So that basically means TVS is merging Sundaram Auto Components, which is a wholly owned subsidiary, with the main company to simplify the group structure and, streamline operations. It's like merging two departments to make things run more efficiently.
So it's all about consolidation and, I guess, cutting down on operational costs, right?
Exactly. This consolidation should reduce duplicate expenses and streamline legal and regulatory compliances. This also allows for more efficient allocation of resources.
Now, I also saw that they have some debt data, things like debt to equity ratios. How does that look?
Well, the net debt to equity ratio stands at 0.12, which is quite low. This is indicative of healthy financial management. It means they aren't relying too much on borrowings.
That's good to know. I also saw the mention of things like the debt service coverage ratio and the interest service coverage ratio.
Right. So the debt service coverage ratio is at 5.49 and the interest service coverage ratio is a very healthy 30.43, which suggests the company has enough earnings to cover its debt obligations and interest expenses.
So overall, it seems like a pretty good financial quarter for TVS. They're expanding, making more sales, and are, managing debt effectively.
Indeed, they're showing growth across different segments and, improving profitability, which are all indicators of a strong and well-managed company. It's a good sign for investors.
And there's also something about the reappointment of Mr. Venu Srinivasan as Chairman Emeritus and Managing Director for another 5 years.
Ah, yes, that's an important development. His reappointment signifies stability and continued leadership at the top. It shows, a consistent vision for the company.
Well, that sounds like a positive sign for the future of the company, I guess. Now, before we wrap up, we should probably give the usual reminder.
Oh, yes, of course. So, for our listeners, please remember to like, share, and subscribe to our channel for more insights into the world of finance and business. You don't want to miss out, right?
Definitely. So, also, these results paint a very detailed picture, but it's important to keep in mind that things like these financials can be complex and influenced by many factors.
Right, and that's a good point to make. Speaking of which, we always want to remind everyone that when it comes to investments, it's vital to consult with certified experts before taking any investment decisions.
Absolutely. And also, TVS seems to be making some investments in its wholly owned subsidiaries. I think they mentioned something about 744.70 crore rupees.
Yeah, it does seem like they're allocating capital into strategic areas. That kind of investment signals long-term goals and, the company's focus on growth and expansion.
One thing that stands out to me is their commitment to sustainability. They mentioned being the first Indian automobile company to publish a sustainability report aligned with the CSRD framework.
That's a really big move. It shows they're not just focused on profits, but are also mindful of their environmental impact, which is really important nowadays. It's like going beyond just selling products to being a responsible company.
So overall, it seems like TVS is moving in a really good direction. I mean, they've got solid financial results, strategic acquisitions, and are committed to sustainability.
Well, that's right. They're showing a mix of financial strength and forward-thinking moves, and this clearly, positions them well for future growth.
So given all of this, what are some of the key takeaways from these results, for our listeners?
Well, I think one of the main takeaways is the importance of, diverse growth. TVS is not just relying on one segment, but is expanding across multiple sectors. This makes their business really resilient.
Yeah, that makes total sense. It's also clear that efficiency and cost management are crucial for a business like TVS to achieve those kinds of EBITDA margins.
Exactly. And the focus on sustainability and environmental reporting is becoming increasingly critical for companies and really, enhances their overall reputation.
So, as a final thought, what does the future look like for TVS given these results and strategies?
Well, it seems like they are on a very solid growth trajectory, especially with their focus on electric vehicles and strategic acquisitions. They seem poised for continued success in the long term, I think.
That's a good summary. So, what do you think? Are we going to see even more growth in the next quarter?
Well, that's something we'll all have to wait and see. Until then, we hope these insights will help our listeners. Thanks for tuning in.